It's another one of those weeks where Tesla and Elon Musk are dominating the markets. A few months ago, it was big news when Tesla announced that they would start accepting Bitcoin as a means of payment, and it's news all over again now that they've done a complete 180. This tweet kicked off a new round of FUD about how much energy Bitcoin mining uses, which we're going to dive into in just a few minutes. And MoneyGram is teaming up with CoinMe to double the number of locations where Americans can buy crypto in person. Stick around because we're going to dig into the good, bad, and the ugly on this week's Exodus Crypto News. Welcome back, everyone. Please make sure you do the thing. And if you're new here, subscribe to the channel for more weekly crypto videos from Exodus. Well, the price of Bitcoin is kind of all over the place right now. On Wednesday, we were at $58,000, but all it took was a day and a half for the price to drop as low as $47,000, a decline of just under 20%. As of today, we're hanging out at around the $51,000 mark, and Bitcoin can't seem to make up its mind whether it wants to go higher or go lower. Aside from a few technical analysts claiming that Bitcoin was overdue for a correction, there were two other obvious reasons that the price crashed. The first was Tesla announcing that they would no longer accept Bitcoin as a means of payment. Since they put Bitcoin on their balance sheet, Tesla has gained a lot of attention from Bitcoiners, and the fact that they'll no longer accept BTC was kind of a blow to the community. Secondly, we just witnessed a fairly large correction in the traditional markets. The S&P 500 dipped 4% in 2 days and the NASDAQ 6%. Those are rookie numbers in crypto land, but a fairly big deal for the less volatile and much larger markets. Now, there's definitely not a one-to-one correlation between stocks and crypto. However, the crypto website Decrypt has shown that there is a strong correlation between large crashes in equity markets, which cause dips in the crypto market. That's probably what we've just seen now. Hopefully, once the equity correction ends and people move on from Tesla, the markets will right themselves and we'll be back to the steady climb higher. Bitcoin's energy appetite is a bit of FUD, as old as time itself. The narrative becomes popular a couple of times a year whenever the mainstream media needs to badmouth Bitcoin and they can't think of a more creative way to throw some shade. What's different today is that instead of CNBC hating on Bitcoin, it's Tesla that's causing the controversy. Remember, we mentioned Tesla is no longer accepting BTC as a payment. Well, supposedly they've decided to ditch the orange coin because the network uses, get this, too much electricity and isn't environmentally friendly. So while it's true that if Bitcoin were a country, it would be the 29th largest energy consumer. To put that into context, the world's most popular cryptocurrency only uses about 80% as much energy as the whole state of New York. Furthermore, 75% of all crypto mining operations get some portion of their energy from renewable sources, and 40% of all the energy that's used to mine crypto comes from renewable providers. What makes the story kind of strange is that absolutely nothing about Bitcoin's fundamentals have changed. Tesla started accepting BTC 3 months ago when Bitcoin was using just as much energy as it does today. Yet, for some reason, Tesla has now decided that Bitcoin isn't green enough and they don't want to be associated with it. Why accept it in the first place then? Something just doesn't add up here, and we'll stay on this story as facts emerge, and we wouldn't be surprised if there's something else going on behind the scenes. Why do you think Tesla really stopped accepting Bitcoin? Let us and everybody else know in the comments below. Got some cash? Would you rather have Bitcoin? MoneyGram is teaming up with CoinMe to double the number of locations where Americans can buy BTC with cash. Here's how it works. MoneyGram has thousands of kiosks in locations all across the United States, typically based in stores like CVS, Walgreens, and Walmart. By the end of May, MoneyGram is going to enable cash purchases of Bitcoin at about 12,000 of these locations, and cash purchases at 20,000 of its kiosks by the end of the year. So what's the next chapter in the Elon Musk story? The last we heard from Elon is that he's working with Doge devs to improve transaction efficiency, potentially promising. Which has me scratching my head a bit because Doge devs are actually Bitcoin devs whose code was mostly copy and pasted into Doge, and any significant activity literally stopped in 2017. In fact, the last significant comment on the code was about 3 months ago. Does that mean Tesla is going to start accepting Dogecoin? Is Bitcoin yesterday's news? Who the heck knows? At this point, anything feels possible. Stay tuned to Exodus and you'll be the first to hear about it. Thanks for watching, everyone. Make sure to hit those like and subscribe buttons. And until next time, hold on.